Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for February 26, 2023. Hope you guys are ready for a new month. We're wrapping up this month and it's been a doozy. And if you're trading the dollar or anything in currencies or even in equities, we've seen a lot of volatility this week. Picked up at the end of the week, and we're going to talk about that and more. And we're going to talk about these setups that we talked about last week and talk about the ones coming up and all the things that are happening. So make sure you don't go anywhere. But before I go on, I'm going to make an announcement really quick. All right. So, and this is an important one. If you guys want to learn about how I passed a prop firm challenge, actually our own for the traders, traders funding program, if you want to learn about that, make sure. Let me go ahead and do this really quick. Make sure you actually register. Down below, there's a link in the description of this YouTube video on how to subscribe to our weekly newsletter. You have to be part of the weekly newsletter to actually get the blog post to get to the video link. It's not going to be a public video. You have to have a link to get to it. So make sure you register for the newsletter, and then you can watch the video on how I passed our own prop firm challenges, the challenges, if you will, that I went through, the ups and downs and how I passed it. And it doesn't mean, and I tell people this, it doesn't mean it's the right way to do it. It's just the way that I did it. And maybe some tips and tricks that might help you along the way, because ultimately we'd love to have you trade our capital, and we'd love for you to be profitable because we benefit from that. We capture 25% of the returns. You keep 75%. But you're trading our money and you're not taking any of the risks. So if you want to learn more about that, make sure you register for the newsletter so you can watch that over the weekend. All right, let's talk a little bit about let's go into the Forex Analytics platform, and let me get my get my head out of the way here, and we'll talk about some of the things that had happened last week. This is the platform and the Forex Analytics community that does come with like the trader funding program if you're going to go that route, or you can always take a $1 trial of Forex Analytics and jump in our community and see the platform and download the platform on the mobile app. I'm not going to go through all the analysis here. And the reason why is because, this analysis is being updated by our team over the weekend. So you're not going to, none of this is really going to be super relevant at the moment because it's already past tense, but you'll get some of the more recent updates after the weekend. But I want to talk about, a few things that I think that are very important to us this week. And these are the charts that I drew from last week. So you're going to see, basically the S&P came down really to key support. If you watch the trade-off that I do a weekly show with Chris Weston of Pepperstone Securities, some of you have seen those weekly videos. I said, hey, if we get down to 39.50, this is going to be a place where you might find some buyers and risk. Now on Friday, we slipped to, I think we went as low as 39, what is that, 39.35. We're getting into that buy zone where, the S&P is going to find some support. Now, I say it's a buy zone, but it's the 200-day moving average. We're through the 50-day. We're testing the previous broken channel support, right? You can see it right here in red. It's questionable whether we're going to bounce from here. And, based on the severity of the drop, I'm not super convinced that the S&Ps are going to stop here, but early next week is going to be vitally important to the markets to see where we go from risk. And I wish I had a crystal, hold on, I kind of do have a crystal ball. This is a Magic 8 ball. Can you see it? It's actually translucent. And on the Magic 8 ball, it can actually tell me where the markets are going. And so this says run. Huh, interesting. Okay, so the markets, sorry, I had to throw that one out there. I don't have a crystal ball, but that's why we have to watch price action. I mean, I've identified the fact that stocks would probably come down and they might find some support here. They are. Now, is this going to provide further support? Well, technically, if you look at the lows, that's the very low that we had, last year's lows, we're at a 38% retracement in the S&P. So technically, this is really important support for bulls because bulls will want to hold a 38% retracement to get a continuation higher. It's shallow enough to keep the bulls in charge. But if we start breaking below that, and we start breaking below this trend line next week, and we get a foothold down here, then the market becomes more vulnerable. Now, why do I think that the markets could become more vulnerable going into the next week? Because if you look at the dollar index is playing out that bull flag pattern that we talked about last week. Do you guys remember when we talked about the bull flag pattern in the dollar index last week, and we talked about the PCE, how important it was going to be? And notice the move that we saw on Friday following the PCE. Strong data, dollar's bullish. We had a tight consolidation, and we looked for a little dip in the dollar for continued longs. We got exactly that. Now the question is, are we going to make it all the way up here? And it's easy when you're seeing the beginnings of a move, but when you're in the middle of a move and you don't have really supportive data coming in next week, we don't have the non-farm payroll next week. Keep that in mind, guys and gals. We don't have the non-farm payroll. So when you're identifying the turns or the continuations, it's a little easier. But when you're mid-move and you might be towards the end of the move, it gets a little bit more tricky. And when you start looking at the economic calendar and what's happening around the market, it's hard to judge. I hate to give you the, I don't know. But that's how I feel. I don't know. The dollar could continue higher. We could stall up here. We still have a little bit more distance to the 200-day moving average. This is all going to be really big resistance going into this next week. But if the dollar can continue higher, then that suggests that the S&P can probably continue a little bit lower. So I want you all to think about that as we go into this next week. The dollar index still looks like it has some room to run. But if for some reason, and I'm going to give you the buts, if for some reason the dollar bears can sustain us from not making new highs and we make a lower low, as trend traders, you're going to have to take that into account, because trend trading, you look for higher highs, higher lows, or lower highs, lower lows. And if we have lower highs, well, that keeps that bearish trend intact, at least near term. Again, it's questionable. I don't have a really strong feeling either direction, and I hate being wishy-washy. If you watch us every day on our free F.A.C.E show, that every morning you can watch our team. Whoops, here's our team. That's not what I wanted to click on. But if you wanted to go to our shows, you can attend them right here. You can find the link down in the description to get to the F.A.C.E show or the Flow show, which I'm not around on the European hours because I'm asleep. But we have our European team is in there broadcasting. I'll be able to give you better flavor every day this week as you're listening in live, how myself and the rest of the team feels about the markets. But right now, it's questionable, and I'm questioning, whether the dollar can continue or reverse. There's some economic data that we're going to be paying attention to early next week, which might give us a clue. So stick around, and we'll talk about that data here in a second. But let's look at other currencies and talk about other ones that are really making a move. You remember last week we were looking for the dollar yen to make a move up to the 200-day moving average and to show a reversal. Well, guess what? It's up here. And BOJ nominee Ueda, governor nominee Ueda, he didn't give us any real information to chew on to look for yen strength just yet. But we're getting close to the 200-day moving average. We're getting close to the 38% retracement. And these are the levels, as you can see, circled from last week. These are the levels that I expected to get to. So do I expect resistance around these levels? Yeah, I do. But can we continue higher? Sure we can. Of course. Look at the dollar. It's exploding almost across the board. Let's take a look at the euro dollar. The euro dollar continues to drift lower, as we mentioned last week. Bounces have been shallow. So if bounces are shallow, that means that the chances of a continuation are higher, and that's what we're getting. Question is, are we going to be able to break into new trend lows below this level right here? That is a question mark. You look at the cable. We were talking about a big double top. We were talking about retesting the 200-day moving average. Remember, guys and gals, this was discussed last week. We talked about all of this, and it's all happening. But will the cable be able to break down? I wish I had, more color. I mean, we have BOJ governor, or excuse me, Bank of England Governor Bailey. He is speaking Wednesday early morning. Maybe he'll shed some light. We have Broadbent. He's speaking on Monday morning, early Monday morning. Maybe that will give us a little bit more indication of whether, the Bank of England is ready to really accelerate rate hikes or not. The way the price action is suggesting right now that this double top could really start to play out if we start breaking below 118.50. And if we start breaking below 118.50, we have to start looking at what downside targets might be. Yes, you could say, well, the double top was going to lead us to a move down towards what, 115, or excuse me, 112 or something. I mean, a double top should lead us back down to 113. But I mean, there's targets in between here and there that could definitely, stall any move lower. So those are things that you should be taking into consideration, especially if you're on the short side, or heaven forbid, you're on the long side. You got to start thinking about what are the implications and where could the sterling go in the event that we see a breakdown in the markets. All right, let's take a look at the Aussie dollar. The Aussie dollar, as we talked about last week, it wasn't here on the video, on the week ahead video. It was throughout the course of the week. Matter of fact, I believe it was on Wednesday on the trade-off show that we talked about the head and shoulder pattern that is developed. And we tweeted about it midweek. And you can see that head and shoulder pattern still has some distance to go, especially now that we've broken down below the 200-day moving average. So if you think about where downside targets here are on the Aussie, that's pushing us down towards 65.50 if we fully complete a head and shoulder pattern in the Aussie dollar. So, what I'm showing you here is that the dollar really could continue to rally. And so if the dollar could continue to rally, what should happen with risk? Well, that should mean that, stocks could theoretically continue to break down going into next week. And that's again, these are the risks that I see present, like clear and present danger, especially if you guys and gals are long risk, or you're long stocks, or you happen to be balls to the wall long in your 401k or IRA or whatever it is. You got to start thinking about these things, because how about if we do have a, let's just talk about percentages wise, how about if we revisit those lows? Well, you're talking about 10 or 11% drop from current levels just to get us down to the lows from last year. And I know some of you are thinking that is possible. Well, how's it going to affect your bottom line? And those are the questions you need to ask. Now, I'm going to give you a setup here that I think is really, it's something that we don't normally cover on the, we don't cover it on Forex Analytics. So on Forex Analytics, it's not one of the 30 instruments that are covered every day, because it's not a currency pair that I necessarily trade every day, and it's not a currency pair that I think most retail traders will trade. But I know a lot of you institutional types, you do trade it. So let's talk a little bit about it, because I think this is a really good indication of what could potentially happen in the future. So if you look at the US dollar South African rand, and my colleague K-Man, he talked about a lot of political risks surrounding South Africa. But I want to show you this development here. This is a big, what we call a cup and handle pattern. And a cup and handle pattern usually has, ramifications of, well, if you take the bottom of the cup to the top of the bottom of the cup to the top of the cup, and then you measure the bottom of the handle, right, to where we can go, theoretically, we can make a move that looks a lot like that. Now, if you look at the longer term trends of the US dollar South African rand, you have to imagine, is that entirely possible that we make a move like that in the coming weeks and months ahead, in the event that we get some risk off, or we see some political reasons for traders, investors not wanting to own South African rand? Well, if you match that up with the S&P and you take a look at it, you have a very, what we call an inverse relationship. This is the S&P in orange. You guys see that, right, guys and gals? Okay. So when you have, the S&P moving down, you get extreme risk off and the dollar South African rand moves up, right? You guys can clearly see that. When stocks recover and you see a big rally in the stock market, well, you can see that the dollar sells off against the rand. It's a very apparent inverse relationship. So I want to talk theoretically here at this stage. Oops, that's not what I wanted to do. Let me go back and do that again. Let's talk about the idea of stocks. How about if stocks, we talk about a 10% drop. What happens if there's a 10% drop in the stock market, which is, remember, it's in orange? What happens to the South African rand cup and handle pattern? Could we challenge the top of that may happen, right? Right. So, those are the things that I think you have to take into consideration. And remember, guys and gals, this is a free video. If you enjoy this and you think that this type of information is going to benefit you as a trader going into next week, please give our team a thumbs up. Subscribe to the channel down below so you don't miss any of this exclusive content that you're only going to see here on the Forex Analytics channel. It's the week ahead video that we've been doing for about a decade. So make sure you do that. But that is something that I'm thinking about going into next week. When you're discussing, what happens if we see some risk aversion. A couple last things I want to cover. I want to cover, what is happening this next week. You can follow along in your calendars that you're looking at. Now, remember, we don't have a jobs report next week. There are certain beginning of the month where the first Friday of every month that you don't get a jobs report. This is going to be one of them. So just keep that in mind. We're going to have the jobs report the following Friday. So like, what is it? 2 weeks from this last Friday. But there is other data that's coming out and what could really move the market. So one of the things that you might be watching, especially going into, let's go over to the gold market just so you guys can take a look at gold. Gold still has that bear flag pattern. We talked about it last week. Still has some distance to go, right, to 1780. Well, what could move that? On Monday, we have the core durable goods orders. Okay. Durable goods orders is something the Fed really closely monitors. So keep that in mind. We have Canadian GDP that will be released Tuesday morning. And the Canadian, by the way, we did not hold this resistance. We talked about it as long as it can stay below this trend line. But we also talked about it last week, if you go back to the video, if it breaks out. Well, we got a breakout. And by the way, this is, if you've been listening to our free shows every day, you would know that this is called a Gartley, crab, butterfly, monkey, whatever you want to call it. It points to 138. And so this move, it's broken out to the upside. I've been playing it to the long side all this week on a breakout. Most of you know that if you're inside the Forex Analytics community. But Canadian GDP could move the mark actually going into this next week. We also have Eurozone CPI. So Eurozone CPI will be Thursday morning. Let me just double check that. Yeah, it will be Thursday morning. We also get to see ISM data going into this next week, which is going to be important for the jobs report. We had a big beat in jobs last month. This month, you can't expect an outsized move like that. I think we created 500,000 jobs roughly, and we were looking for about 200,000. So you should see the jobs number moderate, and you'll see it probably come in within expectations. But what's going to clue us in going into this next week is also going to be that non-farm payroll data. Now remember, with Forex Analytics, you get this data flash, and this data flash gives you the data as it's being released, kind of like a Bloomberg system. When Bloomberg, gives you the data as soon as it's released, it pops up, it populates here. You get that with Forex Analytics. It's one of the many tools that you'll get alongside like the Live Squawk feed our private news flow feed for our Forex analytics folks. There's a lot of stuff that doesn't fit on Twitter that goes right directly into this feed as well. Plus you get our exclusive chat room. So make sure you guys check us all out. I want to say thank you for spending your valuable time over the weekend here with myself and the Forex Analytics crew. I hope you have a wonderful weekend. I hope you have a safe weekend, and we'll see you Monday morning. Don't forget to register for that newsletter if you want to watch the video on how I passed the prop firm challenge and kind of some tips and tricks. All right, guys and gals, my name is Blake Morrow. Have a great remainder of your weekend. I'll talk to you soon. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.